Welcome back to Investing Talk Podcast. Today, we're zeroing in on an upcoming earnings report that's truly generating a lot of buzz. We're talking about Snowflake and its highly anticipated earnings that, well, everyone's watching. Our mission today is to unpack all the crucial pre-report insights for you. From analyst expectations, historical performance, the broader market context. Our goal is for you to walk away feeling really well informed. Before we jump into the details, if you find value in these discussions, please take a moment to subscribe, like, and comment. It really does help us out. And hey, if you're feeling generous, you can even consider buying us a coffee. Plus, if there's a specific company you'd like us to look into for a future session, just leave a comment below. We love hearing from you.
That's right. And Snowflake, as a leader in the data cloud space, it gives such a fascinating lens, not just into one company's health, right, but also into those bigger underlying trends. Things like enterprise cloud adoption, data consumption. It's huge. Understanding these earnings really means understanding a piece of the digital economy's pulse, how businesses are using their data.
Absolutely. So let's get straight to the essentials for anyone tracking Snowflake. When exactly are they set to report, and what are the market's general expectations right now?
Okay, so Snowflake is scheduled to report after market close on Wednesday, August 27, 2025. And when we look at the analyst consensus, that's like the average prediction from the big firms. The expectation for this upcoming quarter's earnings per share, or EPS, is sitting at $0.66. Now, a specific dollar figure for revenue consensus isn't always widely cited everywhere, but we do know last quarter's revenue was $1.04 billion. And importantly, analysts are definitely anticipating continued year-on-year growth. Strong growth.
Okay, $0.26 consensus. And what about that unofficial whisper number that often floats around before these reports? Is there a sense that maybe the market's expecting something a bit different?
The whisper number.
Yeah, it's always an interesting part of earnings season, isn't it? It's that sort of unofficial vibe, what traders might really be thinking. For Snowflake, there isn't a specific numerical whisper number widely cited in our sources. But typically, these unofficial numbers, they tend to lean slightly above the official consensus. And given Snowflake's recent history, they keep beating estimates.
Right.
So the underlying sentiment could mean expectations are maybe closer to, say, $0.28 to EPS. Plus, the company's own guidance, while not giving exact dollar figures, has consistently pointed to really strong product revenue growth. And they keep focusing on expanding consumption, getting customers to use more of the platform. That's key.
That focus on consumption makes sense. It's not just signing up, it's using it. So that sets the stage. But track record is huge in earnings. How has Snowflake performed historically? Have they consistently met or beaten those expectations? Is there a strong pattern? Yeah, and here's where it gets, really interesting, and why Snowflake gets so much attention. They have beaten EPS estimates in each of the last 4 quarters. Every single one.
Wow, 4 for 4.
Exactly. It's not just a fluke. It suggests, maybe disciplined operations, maybe conservative guidance. Could be both. But it definitely builds investor confidence, like a little cushion before the report drops. Just to give you some numbers. Q2 2025, they reported $0.24, beat by $0.02. Q1 2025, $0.18, also $0.02. Going back further, Q4 2024 reported $0.44 scaps, but still beat the non-GAAP estimate by $0.00. And Q3 2024, they reported $0.25, beating by a pretty substantial $0.09.
That is a strong trend, a very consistent beat. So what does this usually mean for the stock reaction after the report? Is it predictable?
Well, predictable is a strong word in markets, right?
True.
But the options market gives us clues. It implies a pretty substantial move for Snowflake. Typically, we're looking at something in the range of 8% to 12%, give or take, around the earnings window.
8 to 12%. So the market expects a big swing.
Exactly. High stakes. Now, the actual price move can sometimes be different, of course. It gets influenced by the overall market mood or, really crucially, the forward guidance the company gives, what they say about the next quarter. And what's also fascinating are the underlying trends in their key metrics. Snowflake has shown really strong year-over-year revenue growth and positive non-GAAP profitability. Now, that's non-GAAP adjusted profit, right? Because they still report notable GAAP losses.
Right, due to heavy investment.
Precisely. Aggressive investment in expansion, which is normal for high-growth tech. So they're investing a lot, but still showing operational efficiency is improving. Margins are getting better. Customer growth, retention's still robust. But, and this is important, the pace of that growth is slowing down, decelerating from those, stratospheric post-IPO highs.
Okay, so still growing, but maturing a bit.
Yeah.
Less explosive, maybe.
Yeah, that's a good way to put it. It's a more mature growth phase.
Got it. So beyond the company's own numbers and trends, what about external factors?
Mm.
Any significant news, broader sector trends we should be aware of that might sway things?
Well, during this past quarter, sources haven't really highlighted any like blockbuster product launches or major M&A activity from Snowflake. The focus seems to have been more on just ongoing product tweaks, enhancements, and, the continued adoption of cloud workloads by businesses, which can be a bit choppy sometimes. If we connect that to the bigger picture, the whole data and cloud sector, it's still growing, definitely, but like we said, at a moderating pace. It's not the free-for-all it once was.
So a shift in sentiment from customers, too.
Yeah, exactly. Enterprises seem to be scrutinizing spending more, maybe delaying some IT decisions. They're often citing, broader macroeconomic uncertainty. That's a real headwind. And competition. That remains a significant risk. The hyperscalers, AWS, Azure, Google Cloud, they're always there. Plus, other independent rivals are all trying to grab a bigger piece of the data cloud pie.
Makes sense. A tougher environment overall. So how have the analysts, the folks covering Snowflake day to day, how have they been reacting lately? Any big shifts heading into earnings?
It's been a bit of a mix recently. Some analysts are still pretty upbeat. They focus on that long-term trend, data-driven everything, Snowflake being well-positioned, the big picture. But others, they're highlighting concerns. Valuation is one. Is the stock price justified given the slowing growth? And those competitive risks we just talked about, they're definitely weighing on some minds.
So a split view then.
Kind of. What's interesting is we haven't seen a flurry of major upgrades or downgrades right before this report. But the general expectation, especially given Snowflake's track record of beating, many are looking for a beat and raise, beat the current quarter, and raise guidance for the future.
Right. That seems to be the bar now.
Yeah. Anything less might feel like a disappointment, even if they technically beat the current quarter's numbers.
Okay, with all that anticipation, let's talk technicals. For those tracking the chart, what's the pre-earnings price action telling us? Especially about volatility.
Well, specific day-to-day moves aren't detailed in our sources, but it's pretty typical for stocks like Snowflake. High-growth software-as-a-service companies, they often see a run-up in price before earnings.
Anticipation building.
Yeah, built-in optimism. Investors hoping for that positive surprise, maybe trying to get in ahead of it. And this ties right into implied volatility. The options market is currently pricing in, like we mentioned, roughly an 8% to 12% move for Snowflake around the announcement. That's based on the at-the-money straddle price.
Which means options are expensive, right?
Mm,
Because traders expect a big move.
exactly. Buying both a call and a put costs more when a big swing is expected, either up or down. So that 8–12% range, it signals really elevated expectations for a significant price jump or drop. High stakes, high potential volatility.
Okay, 8–12%. That's definitely significant. So let's try and bring all these threads together. Past performance, current headwinds, volatility.
Yeah.
What are the potential bullish and bearish scenarios we should be thinking about after the report?
All right, let's start with the bullish case. This is what the bulls are hoping for. It would involve a material beat on both revenue and EPS. Not just squeaking by, but a solid beat. And crucially, accompanied by signs of accelerating consumption growth. That's key. Plus, a strong net retention rate showing existing customers are spending more. Then you'd want to see an upward revision to their full-year guidance. That's the raise part. And ideally, continued margin improvement, showing that operating leverage is kicking in, revenue growing faster than costs.
And if all that happens?
You'd likely see the stock gap up significantly, maybe even push past that 12% implied move.
Okay, that's the dream scenario for longs. What about the flip side? The bearish case.
Right, the bearish case. This could be triggered by a revenue or EPS miss, even a small one. Or maybe they hit the numbers for the quarter, but the outlook, the guidance is disappointing. Any commentary from management about slowing customer additions or decelerating consumption growth or margin pressure, those would be major red flags.
Because they hit the core growth story?
Exactly. And any heightened worries about competition really taking a bite or signs that enterprise demand is genuinely sluggish, that would also weigh heavily on the stock. Could see a sharp drop.
So if you had to pick just one key metric for listeners to focus on when that report drops, what's the absolute most important one?
The single most important, without a doubt, it's product revenue growth.
Product revenue specifically.
Yes, more than overall revenue, more than headline EPS, arguably. Because product revenue tells you directly about actual platform usage, how much data customers are crunching, storing. It's the purest indicator of demand for their core service and the health of that customer base. That's what the market watches most closely.
Product revenue growth. Got it.
So our overall leaning Putting it all together, we'd say neutral to cautiously bullish heading into this report. The company does have that strong history of beating estimates. The long-term metrics look good. That data cloud trend isn't going away. However, that confidence gets tempered a bit by the slowdown in sector growth, the macro uncertainty. Those external factors could cause volatility, even if Snowflake technically beats.
Right.
So we'd put our confidence score at maybe a 6 out of 10.
Interesting. A 6 out of 10 for a company with that kind of beat history. What's holding it back from, say, a 7 or 8? What specifically needs to happen for that confidence to increase?
Yeah, that's a fair question. The SEEPS reflects that, look, their execution's been great, but the environment is tougher. To get to a 7 or 8, we'd need to see clear proof that Snowflake isn't just navigating these headwinds, but that their consumption model can really power through even when budgets are tight. Maybe that means showing faster new workload migrations than expected, or a stronger rebound in existing customer use, defying that broader slowdown.
So proving resilience.
Exactly. Resilience. Plus, really clear messaging from management on the path to profitability without killing growth. And ideally, some concrete signs they're successfully pushing back against those competitive threats from the big cloud players.
That clarifies the nuance perfectly.
Huh.
Okay, given all that the scenarios, the volatility, the 610 confidence, what are some strategic thoughts for listeners? Different approaches for different risk appetites?
Sure. For the more risk-averse investor out there, it might just be prudent to wait. Wait for the earnings print, let the dust settle, see how the market reacts, then reassess. Avoid the potential gap risk. Alternatively, if you want some exposure but want to limit risk, you could look at defined risk options strategies, things like vertical spreads. These let you participate but cap your potential loss. You know exactly what's at stake.
Okay, wait or use defined risk. What about for the more risk-tolerant investor?
Well, for the risk-tolerant crowd, remember that high implied volatility makes just buying calls or puts outright pretty expensive.
Right, that 8-12% expectation is baked in.
Yeah, you need a bigger move than that just to break even sometimes. So in that case, maybe consider market-neutral options strategies, like a short straddle or strangle. These try to profit if the stock's move is less than implied volatility suggests. But, warning, these can have unlimited risk if the move is huge.
High risk, high reward potential then.
Definitely. Or you could still make directional bets, buying calls or puts if you have a really strong conviction based on your own analysis of their potential guidance and the sector news. But know that it's a higher risk play given the volatility premium. It really comes down to your personal conviction and how much risk you're comfortable with.
That gives a great range of considerations. Well, that brings us toward the end of our look at Snowflake's upcoming earnings. It's clear there are just so many layers here, way beyond just the headline numbers.
Absolutely, and what's really fascinating, the thing to watch, is how Snowflake manages to maintain that impressive product revenue growth, especially with these macro headwinds blowing and competition heating up. That will define their near-term story. It really boils down to this question for investors, I think. In a slowing market, how much of a premium are you willing to pay for growth? Especially if maybe profitability or stability takes a bit longer to materialize. Where's that balance point? That's what the market's trying to figure out.
A crucial question indeed, finding that balance. Thank you for joining us for this look at Snowflake. We hope this breakdown helps you navigate what's sure to be an interesting earnings season.